limited companies in general cost more to run. You have to do annual accounts, they're more expensive to file a set of accounts. Sorry, the accounts is a huge amount of tax. So it's a difficult one, but that can be, I've seen £1,000 a month, people putting through, oh, that's for car HP.
Hello and welcome to the Director First podcast, where I invite clients to directors first, but also experts in accountancy, financial literacy, people that I think you as directors in the UK are going to learn a thing or two. And today I am joined on the show by a colleague who I've worked with a number of times over the years, Libby, who is well, I'm going to let her do her introduction. Libby, tell us how you got into accountancy and what it is you do.
So I've been an accountant for about 20 years now, quite a long time. I do general practice accounts and I do bookkeeping for people, your VAT returns, year-end bits, CIS returns, pretty much anything to support a director in their business. Just in the last few years, I've been working with Chris to do some insolvency accounts and preparation for people, and just trying to prevent people having to go down that road as well, using Chris's knowledge too.
Brilliant. Well, and listen, it's I'm just glad to have got you on the podcast. Just so people know, I mean, I know distance isn't really an issue now with people, but can you just tell people where it is you're based and what type of clients you get in your practice?
Sure. So I'm based in Eastbourne. I work from home most of the time, but I work with Humphrey Co in Eastbourne Town, quite a big accountants. There's about 100 people that work there now. I think it's pretty big. We get all sorts through the building. We've got absolutely huge clients, and then we've got one-man bands, and we've got people starting up. We've got various experts in the building that can help with different, whichever aspect you want help with, whether you just want your annual accounts doing or whether you want day-to-day help or bookkeeping help, there's someone there that can help.
Brilliant. Libby, listen, what I'm going to do, I'm going to sort of just dive into a few questions. And again, this podcast is it's designed to, if people took better notice on what their accountant was saying, I think less people would end up picking the phone up to me, because a lot of insolvencies can be avoided. Now, my first question to you is, what processes do you think are crucial for small business owners to understand from an accounting point of view?
I think before you start, do you need a limited company? That's probably the first thing. So people come through the door and say, I've already set up a limited company. And you think, why did you do that? There's a little bit of talking down the pub. It used to be that it was much better and much more tax efficient to be a limited company as a one-man band. You used to get, back in my day, 30,000 of dividends that were tax-free. At one point, you could get £10,000 corporation tax relief on your dividends and have it tax-free in your bank as well. So pretty much the government were giving away £10,000. That was a few years ago now. That's gone. It's down to £500 of dividend that is tax-free to you. And when you pay yourself a dividend, you're paying corporation tax on that, whereas if you pay yourself salary, you're not. So why did you do it? Some people say it's limited liability. Up to what point? Because if, as you know, Chris, if you are borrowing money from the company and you're acting insolvently, then you're actually personally responsible for that debt. So that's a massive worry. A lot of people don't realise that. Limited companies in general cost more to run. You have to do annual accounts. They're more expensive to file a set of accounts. It's better to be in self-assessment if you can, unless there's a big tax benefit. But some people like the prestigiousness of having a limited company. They think that's where they're going to end up. Why not start that way? But I'm finding more and more people, because it's so easy to set up a limited company. It's about 2 hours with Companies House. It costs, I don't know, 30 quid or something. It's very easy. And people can do it without any knowledge. And some people have made a mistake. I had somebody that put that they had £1 million worth of shares in their business. I thought, oh, that's brilliant. Except you now owe your company £1 million, and you've got a negative director's loan. So that probably wasn't the most sensible thing to do. So people can make mistakes like that. It's too easy to make a mistake with a company like that. But just day to day, if you think, right, I'm going to get a business loan is the first thing you do because you're going to go and buy some stuff and you haven't had any money yet, your company's owing money. So that isn't your money, that is the company money. That company is already in debt. If you're then taking money out and you haven't earned any, you owe that money back to the company unless you're running up a PAYE scheme. And to run a PAYE scheme, you've got to set that up, you've got to pay yourself, and you've got to pay tax. So it's heavy. It's worth having a chat with somebody. Loads of accountants offer a free hour. Use the free hour, and just at least know what not to do, and then see how you want to go forward.
Well, you know what? You've started off with a great question, right? You know, listen, should I be a limited company? So in your take on this, what would be the tipping point, Libby, where I'm like, you know what, I actually should be a limited company now? What are the key things that someone needs to look out for to go self-employed, limited company? What would be your view on it?
It's a calculation to be done about how much profit you think you're going to make. But the tax differences getting smaller and smaller, as I mentioned earlier, between the two. But a lot of it is that people think they come across more professional if they're set up as a limited company. So it tends to be bits like that. There's a complication of splitting money as well. So if you've gone into business with someone else, being a partnership can have its own worries because you are jointly responsible for the debts of that partnership. So if your partner goes off and spends a load of money, you are in the chair for that just as much as they are. You're jointly and severally liable. So that puts people off. A limited company gives you a little bit of help with that it shares, although I see people fall out all the time where they're not putting everything through the company. But it does at least provide, you can have a contract between the directors that all income must be put through the company rather than they go off and earn their own individual money. So it's that setup. If there's 3 or 4 of you, you might want to be together and just do one set of accounts and split the money up equally between you. So it tends to be a more practical reason rather than tax now, that people would want to do that.
And I think the key message here is it's like setting off in the right manner, isn't it? Before you do, you're going to need, if you're setting off in business, you need an accountant.
Well,
you
yes.
know, like, I mean, so you might as well go there at the start, like you say, milk your free hour and go, what is it that you're going to advise me, you know, impress me, how you know, I need an accountant, and it gives you guys the opportunity to show them what you can do, give them a bit. It's like what I do. I give a ton of free advice on the basis that, you know what, fingers crossed, I'll win a bit of work from it. And that's it, isn't it? We're giving free advice because I know if somebody's going into my you know, my arena, they're going to need somebody like me, much like you guys. So people should go out there and ask the questions, you know, and obviously follow that advice as well. And but yeah, really interesting thing that you've opened up there. And listen, one of the questions that I want to ask you is, and you've sort of touched on one of these things already, but in your experience, Libby, what are the most common accounting mistakes you will see a small business owner make, and how can they avoid them?
Well, VAT. Loads of people make mistakes on VAT. That's probably the most common error. That's just sort of a day-to-day thing that people do. A lot of people assume everything has got VAT on it. There's a lot of zero-rated things out there, and there's a lot of things that you can't claim VAT on. If it comes to the point where you might get involved, Chris, if that's happened over a year and you've been doing your own VAT returns, and then your accountant looks at it and they add all of that back, that it's private amounts, or you know you've claimed for entertaining, which you shouldn't do, you could end up with quite a debt to the VAT man without realising it. So that's a really common day-to-day one. Obviously, private expenses. And although software is being pushed, it's very easy to, if you've done it once wrong, that software, every time that item will come up, will suggest that you post it to that place again and again.
Mm-hmm.
And so you're going to go think, oh, this is brilliant, I've reconciled my bank, but it's all wrong, which is annoying, to say the least. Not, I guess, not registering for PAYE is another common one, or not filing monthly. And those fines, if you don't file PAYE monthly when you're a director, that's £100 fine each time. We pay it in 30 days. That's really expensive if you didn't have any tax to pay. Even if you haven't got tax to pay, that's still chargeable, that fine. Same as CIS returns. You get yourself in quite a mess with fines. So it's being aware, and I think, as you said earlier, that the setup part of getting someone to even just help you the first month. And if you're using cloud accounting, which is helpful, your accountant can drop in there, have a look, and see, right, you need to stop doing that, or set some rules up for you, or adjust the VAT bits for you, so you can carry on going in the right direction rather than going into a deeper hole.
I mean, can you give me a rough idea of what you would charge for sort of them basic accounting packages, you know, VAT return, PAYE? Because a lot of accountants sort of they'll do year-end accounts, and they'll get people to pay on a monthly basis. Would you be able to share me a rough pricing structure?
So where I work with Humphrey Co, I also do bookkeeping on the side. So I tend to I push that through my company first of all to get someone set up like that. Humphrey Co are looking at year end. They have got people to help, but their main point of business is that they're doing these annual returns. They're looking at big business, so they use me a lot. And I charge £40 an hour, but that's what I charge, and that's for anything and everything, whether that's setting up.
And how many hours would a normal small business? Because the point I want to make to these people that are watching is, it's cheaper than you think to get a professional. It's like I was a plasterer's labourer in a former life.
Yeah.
And I think, push comes to shove, I could probably plaster a wall. It would look terrible. It would look absolutely atrocious, but I'd muddle it together. And that's what I think people think. They're thinking, oh, well, I can do this myself. I can do my year end. I can do my tax return. And it's like, you can, but if you pay a professional, you know, a fairly minimal fee, you've got the headache taken away from it, but you're going to get a different outcome, aren't you?
Yeah, totally. So if I've got working at Humphrey Co, if I've got a good bookkeeping set that's nice and easy, you're looking at about £1,500 for a tax return, corporation tax return, everything done neatly. There's certainly statutory checks that they have to carry out to be able to send the accounts off, and they're obviously professionals, so everything's covered, and there's an insurance involved and that sort of thing. So if you have made mistakes and your accountant needs to start picking at stuff, the software's gone wrong, it could be £5,000 or £6,000. I've seen £8,000 or £9,000, because that time, just for a professional accountant, you're looking at about £120 an hour for them to be able to do it. You don't want to hand a mess to your accountant. Get a bookkeeper to have a look at it, or get them their influence every few months, just to make sure everything's looking good before you hand it to your accountant. And I do a deal with some people that they've gone and done it themselves, and then I'll say to them, right, I'll do a deal with you. Right, what we'll do is I'm going to redo your stuff. If we don't reduce your accountancy bill next year by more than 50%, I'm not going to charge you at all. So I've not come out without a paycheck yet, because that difference, and then we go 50% on the split. So I'm not working for free. It's absolutely brilliant doing that, and it does show people they're saving money, I'm making a bit of money, and their stuff's good, and they know where they are throughout the year. So everyone's a winner on that one. But yeah, just taking that time. So £40 an hour sounds quite expensive, but when you talk to people, I work about 10 times the speed that they do, because I know what I'm doing. Rather than having to look every single thing up, I know it already, or I know doing it for so long, or I know someone that does know it. and we can get that done really quickly, rather than, so even £120 an hour, the speed that people work when they can turn a set of accounts around in 2 hours, you'd be struggle to be able to do that. You're really going to struggle to be able to do that on your own. It would take a week at least, and then you might get it wrong. There's more and more inquiries going out now as well for people, so wrong boxes get ticked. So I had somebody the other day that clicked the box to say they didn't have to pay class 4 NI, didn't get picked up for 2 years. They did have to pay class 4 NI, and in comes the bill plus the interest plus the penalty because it's gone to assessment. So getting that early, get some help, definitely get some help.
And one of the things that I see with small businesses, you know, they are the doer in the business. They do the work. They raise the invoice. They chase the invoice. They do the HR. And like, we've only got so many hours in the day. I mean, I can only share my experience. I know what I'm good at, and I know what I'm not good at. And it's sort of been drilled into me is I've got to try and raise my game a bit by bringing other people in who are better at doing their things, and I can try and focus on what I'm good at, which is dealing with clients, chatting with clients of a certain size. That's where I want to be spending my time, you know, designing stuff like this. This stuff brings us working, you know, marketing, content creation, and actually getting the deals done with the directors. Now, if I'm about doing, you know, some type of spreadsheet, which I can't, honestly, my head hurts. I can't do what you do, Libby. You know, I can't, my head doesn't work. If I keep staring at numbers for too long, I want to implode. You know, it's and it's about delegation, isn't it? Getting that stuff to someone that you can trust for, and like I say, it's, listen, £40 an hour for a professional. When you work it out, what it's going to take you, it's a snip.
It is, I think it's important to know what you're good at. I mean, I love a good spreadsheet. I now know not to bring that up in the next dinner conversation that we have, but we've got a big TV screen. If you want to view that spreadsheet, that's fine. In cloud software, the same way. It's importing CSVs. I mean, we could just go on about all these exciting things that we do, but we won't for the sake of insomnia. So I think getting somebody in there early is a definite. Go and make money. If you own a business and you're doing the thing you love, you're taking a risk by running your own business. It's hard to do your own business. 50% of your time needs to be spent on admin. So if you're spending your 9 to 5 out earning money, as you should be, that it doesn't leave many hours in the day to go to sleep and have something to eat. So use the people that can do it that quickly for you. You can have a hands-on approach with people. I tend to work with people really closely when they're starting to get them right, and then those questions fade as the weeks pass to sometimes only hearing from people maybe once a quarter. That's how it should be. And accountants are willing, and they do make losses at the start with clients all the time. They might get a fixed fee sorted out to get you set up and going. They might say to you, right, year 2, it's cost me a fortune to work with you because you're asking me questions every 5 minutes. I'm going to revise my fee to this. And that's fair enough. Then you know. So if someone's willing to do a fixed fee just to set you up and get you going, I think brilliant. Let them do as much as you're happy with them doing. I have some people that I have full access to their bank. I pay all their suppliers, I pay all their staff, I do all their bookkeeping. And then I have people that I just touch once a year, run their year-end accounts and do a quick email. And that seems to be about it. But they tend to have
something earlier. Sorry, you touched on something earlier. You know, we're talking about common mistakes.
Yes.
And you talked about personal expenses going through a business.
Yes.
You know, in a sharp intake of breath, I saw you take, because that's without doubt, the number one problem that I face with a director who rings me, and this is how the call goes. Chris, you know, whatever's gone on, revenue debt, supplier debt, bank debt, Chris, I am vastly insolvent. I really need to go into liquidation. they've generally spoken to a few people before they've spoken to me, and they're price hunting, and they're like, what does it cost to go into liquidation? I'm like, 4 or 5 grand. Oh, I've had a cheaper quote. I said, well, just hold your horses anyway. I says, well, it's not about that. Send me over a balance sheet and your latest set of accounts. And it's there that they owe the company 50 grand, 20 grand, 30 grand, 40, whatever that figure is. They've got a big old director's loan account overdrawn. And it's because they've been spending money personally out of the business, or they've been taking too much money out of the company. And they will always say, well, I didn't know about it. Bullshit. They've definitely. How do you handle these directors that do this? What's your process, and what's the advice that you give them?
I'm very honest with people and straight up front. Some people don't like that. I do admit I have put a few people's noses out of joint, but it's not nice to hear. But I'm telling you for your own good, sort of thing. You'll get people, they put the personal car finance through. That's a big one. The company doesn't own the car. They are paying HP on it. It goes through, well, I do business mileage. Well, business mileage does not catch up with a Mercedes HP per month, unfortunately. If you have it in the car, it's huge amounts of tax. Sorry, in the accounts, it's a huge amount of tax. So it's a difficult one, but that can be, I've seen £1,000 a month, people putting through, oh, that's my car HP. They're putting it in the profit and loss, shouldn't be there anyway, even if it's in the, if you have purchased the car through the company. That's personal. People,
Libby, can I jump in? What can they bill though as mileage a month? What would be a reasonable figure to bill? Because a lot of people, they'll buy a car personally. They can bill the company some mileage, can't they, to try and reduce that?
So up to 10,000 miles, you're looking at 45 pence a mile, and then 25 everything over that. What you should do is write down every business where the start of the clock, the end of the clock, because it's not just, it's okay to do a Google Maps, but it might take you 10 minutes to find a parking space. Well, that's all allowable, and that's all allowable mileage. And if you've got to do a one-way system, that can add up, or you take a wrong turning. So do the start and do the end, and then do the same on the way back. That's a business expense. Claim the 45 pence a mile, put it in your accounts straight away, or claim expense or a purchase invoice or something like that on your cloud accounting so you don't forget, and go with it. If you do that, you can't claim for burst tyres or insurance or MOT. If you're doing that mileage, it is mileage only. Whereas if you own the vehicle and you're paying P11D tax on that vehicle, which could be pretty heavy, everything's covered by the business. A lot of people claim VAT on cars. You can't claim VAT on cars on purchases at all. Nobody can, unless you buy and sell cars, that aren't for the business use. It's for trade only. So, but there's then company cars where people have got business use where they don't get the petrol. It's complicated. It depends what car you drive. It depends if it's electric or not. It depends if it could be a van. All different rules. But have a chat with somebody and say, this is the car I would like, or possibly this one. Which one is the best to put through my company? Or should I just claim a 45p mileage? Obviously, you're on a bit of a winner if you've got an electric car. If you're claiming 45p a mile, you're keeping it out, especially with the tax changes coming up, and it's not going to cost you 45p a mile to drive it. So you can make profit out of it. But if you've got a big Mercedes or something like that, then you've got to be very careful, because chances are it's going to cost you more than 45p a mile.
Well, I interrupted you there, Libby. I just thought it was an interesting point to pick on. What other things are you seeing that's causing these directors' loan accounts to get out of hand?
Silly things. So clothing is a big one. People thinking, oh, I need a suit. That's not allowable.
So it's a Stone Island jacket through work.
No.
Business purposes.
No, even a barrister can't put through their kit. That is
no.
So
what can they do? Is it about 300 quid a year you can put through for work?
It's not a figure if it's branded. so it's got your company name plastered all over it and the phone number, it's advertising, you'd be allowed for that. But
Okay.
socks, pants, trousers, and anything that is a no. But anything, if you need to keep warm, so if you're a roofer or something like that, and you've got gloves or you've got steel cap boots, something that you're not going to go wearing down at McDonald's, it's for a night out. It's something that you would only wear for work. I've had an actor trying to claim toothpaste, saying he needs to have clean teeth. And you think, I think you would have cleaned your teeth anyway, mate. It's being honest like that. Leather jackets because I've got to look a certain way. No, none of it's allowable. Maybe if you're an actor or an actress, but not for auditions. It's only for stuff that's actually part of a play, and the items get kept in the theatre. So and theatrical makeup, not normal makeup. So I see a lot of that. Going out for dinner with your family. Yeah, it's a Monday night and you're taking the wife and the kids somewhere. Absolutely fine to do that, but that's not a business expense. That's not even entertaining. So you'll see people. I always look. They say, "Oh, it's travel." If I know they're from Brighton and they've gone down to Preston in Brighton, that's not travel. That's in the revenue's eyes at all. They're not going to. If they've gone to London for the day and they've bought a Costa coffee, that's allowed, and they have what they call it. I forget the words that the revenue use now, but a reasonable amount of money that they might spend on lunch, probably around £20, just for yourself while you're in London, that would be allowed. It then switches to entertaining. If you happen to meet a supplier while you're there and you pay for his meal, the whole lot is then entertaining. You can't claim the VAT on it anymore. It's not travel and it's not allowable for tax. But the worst one is it's actually a private expense. You see people going away for work. They might go to the Maldives to go and give a lecture, which has happened in the last couple of weeks. I asked for evidence of that because it's rather me ask it than them. And they actually sent me photos of giving the lecture, and I've put it in the cloud accounting software so that it's ever looked at. There's a picture of him doing it. But if there's any private expense on that trip at all, so he's had, I don't know, a trip out, then the whole lot of it could be considered to be private if the revenue got hold of it. So it's keeping those expenses that are merged out. Don't put those through. If with travel you book for yourself, then that would be allowable. Otherwise, you don't want to end up with it being in director's loan account. So
one of the biggest things that I see is that, and again, I feel that the issues have been arisen is because they've not been in communication enough with accountants. They're not using any type of software. But where they've become insolvent a year or so ago, or their profits have gone from here to here, they've still got to take their whatever they class as their monthly income.
Yeah.
And obviously, business cannot afford to pay that income. So
yeah.
Are there any ways that people can sort of have a little bit of a sense check of how they're paying their money? Is there any advice that you can give them on how to avoid this problem?
I mean, putting everything through salary, although that's expensive, would be an easy way of doing it. No one's going to argue with that. But doing a mini set of accounts to prove that there was the profit in the business at the time, because you can only take a dividend when the business has retained or is making profit. If you've done that part and you can prove it and you do it every time, then you shouldn't be having a problem where you've taken too much. It tends to be if you've borrowed money and you haven't got enough money in your bank account to pay all that borrowing off immediately, you need to have a look very closely whether you've got the profit, because chances are you haven't. That tends to be a really quick way of doing it that I tell people to do. Just literally take those loans, take away the amount in the bank, take away your fixed assets, and there you are. It should give you a rough figure. But there's nothing like playing it safe where you don't declare that dividend until you've got your draft accounts, and then you could then declare it and then take it throughout the year after. So doing it the opposite way around to how you do it, how you would normally do it. So declare and then spend, rather than spend and then declare and find there's nothing there.
if they're starting to, revenues are dropping, costs are going up, profits are reducing, there's no issues with them stopping taking that dividend because it can't afford to, and just taking everything through the salary scheme. I mean, I say that to some directors, and they speak to their accountant, and their accountant's like, well, why would you want to do that? And they don't realise that if things don't get better, the business goes insolvent, they end up back on my desk. They've got a big direct loan account that we've got to pursue them for. So yeah, as long as it's a reasonable salary, sort of in line with, what the standard is, it can't really be criticised by creditors if the business ends up in liquidation.
No, I do give that advice to people, that it's better to do it that way and keep an eye. But the number of people I speak to that say they didn't realise they had a negative director's loan, and those accounts have been like that for a few years. I think their accountant must have told them at some point, but they probably used Section 455 notification of tax. Or now that's a complicated thing where you pay tax on your overdrawn director's loan account. You might not even be aware you've paid it. It will just be part of your corporation tax bill. If you see that you're paying Section 455, your director's loan is overdrawn, you need to sort it out.
And I've got on sorry, Libby, go on.
You can pay yourself a bonus in salary to clear it. You cost yourself tax, but you might get yourself out of hot water down the road.
I've never met an accountant yet that don't explain directors' loan accounts. I think sometimes it's like it only becomes, well, I'm going to say it only becomes a problem in liquidation. That's not true, because you've just explained the big problem is the business can't afford to pay you what you've taken. You've got corporation tax. You're going to be walloped with S455 tax. And so that's a big problem. End up in a liquidator's path. And it's a huge issue because that liquidator is going to ask you to pay that money back. Yes, discounts can be done, deals can be done. But if you're a director with some wealth, property, equity in properties, buy-to-lets, these directors' loan accounts become a lot harder to solve, because ultimately, a liquidator could be criticised for doing a deal with a director that has a lot of personal wealth, because the creditors go, well, you should make them bankrupt. That's how serious these overdrawn loan accounts can become. One of the things that I wanted to ask you is, can you explain to me the difference between cash flow and profit, and why it's important that a small business owner understands the difference?
Sure. So cash flow, you can do a daily cash flow, a monthly, or you could do that with profit, but it's how much money is in your bank, how much you think you're going to get in the next whatever period you're looking at, and how much you've got to pay out. So you might be making a loss, but somebody owed you money from ages ago and they suddenly pay you and there's cash in the bank. So your cash flow positive, but your profit is negative. You're making a loss. So if you're in that situation, you need to look at why you're making a loss, even though there's money in the bank and the cash flow is good. If that profit is showing a loss, you are going to go into negative cash flow at some point unless you change it around. So knowing that, being able to pay your bills on time is really important. That is to do with cash flow. It's expensive to pay things late. People charge interest, statutory interest at 13%. That's pretty high. And if it gets referred on, you're looking at late payment fees. So that debt is getting more and more expensive the longer you leave it. So even if you've made profit, but that person hasn't paid you, you're in that cash flow situation, you can't pay your bills. If someone then comes along and puts you into liquidation or administration, that's the end of the business anyway. So managing both. So I would say look at profit and loss as the predictor, and cash flow as the real and now. So, and they're both as important as each other, in a nutshell.
Thank you for that. With regards to sort of cash flow, have you got any effective strategies that a small business owner could use to sort of manage their cash flow?
Yeah, cloud software is very good for that. Most of them have got apps for your phone, and a lot of them with AI built in will tell you whether your cash flow is positive or negative. And by just putting in due dates, which a lot of them again automatically do, it will build you a forecast quite easily. It's not going to be amazing, but it will give you a week or a month's look on it. But the most important thing is getting cash in if you're in a cash flow difficulty. So you can also set up softwares to send reminders to people and pick up the phone to people that haven't paid or keep paying late. Start charging them statutory interest so that they stop doing it, because that's causing you a problem. You know, money's expensive at the moment. Interest rates are higher. That's causing people difficulties. If people think they don't have to pay you for 90 days, they won't. So start being that person that's annoying. As they say, the squeakiest wheel gets the oil. So
absolutely,
that get your software doing as much as possible. That will pick up a few, and then pick up the phone after that and just say, can I have a payment date from you? I'm going to be charging statutory interest, which everyone can do, which is the base rate plus 8%. It's a lot of money to be able to charge from this date should that payment not come in. So although it can seem, some people find that aggressive, it's also not very nice to not be paid, and then you can't pay your mortgage and you can't pay your bills. You've got a problem. So you can be as nice as you like, but it's business at the end of the day. It feels uncomfortable to do it. You have to step out your comfort zone for a lot of people, but it's worth doing.
And listen, obviously we've talked about software. Libby, what is your favourite accounting software? What do you recommend to small business owners and why?
So it depends how big your business is. Xero was always my favourite. That's got the cost of that has gone up recently, and I've been looking more at QuickBooks. If you bank with NatWest and Metal, you get a free agent. Now, free agent is pretty good. It's got payroll thrown in, and that's free. That's actually free.
Yeah.
Xero I think the smallest package now is £19 plus VAT. It doesn't do a lot. You don't run payroll for that. So for one payroll, you're looking at 33 plus VAT. It does jump. If you've got more than one person on their payroll, it's £50 for 47 plus VAT. So that has ramped up. There's a few free ones about that your accountant will never have heard of. And while they're free, and that's great, if the accountant doesn't understand how to use it, then you're not going to be able to get that support. So the Xero, QuickBooks and free agent seem to be the biggest ones that people use, and your accountant will know how to get information out of that for you, and they're pretty good on the information that they're giving out. But yeah, I still favour Xero, although it's got expensive, but that's maybe because I've used it so much. So yeah, maybe why, but
listen, me too. Libby, thank you for joining us. Is there anything else that you'd like to talk about today, or are you happy to wrap it up?
I'm happy to wrap up, and if people want to help pick up the phone and talk to somebody at Humphrey Co, they've got a lovely group of people there, normal speaking people that can actually talk you through a problem. They'll give time. They can't give specific queries until you become a client because of the rules, but it's still worth having a chat with somebody and becoming a client. If it doesn't go anywhere, they're not worried. Go and get that good advice.
And can we follow them, or can we follow you? Where can we get more information about both of you?
So yeah, Humphrey & Co are available online. They're on Twitter, they're on Facebook, they've got their own website. Yeah, probably more than I know about with with everything that goes out on social media, as there's a lady that manages it there, does a very good job. But yeah, Humphrey & Co, spelled HUMPHREY, and Co in Eastbourne. Thank you very much.
Libby, thank you very, very much. You've been an absolute star, and I've really enjoyed this chat.
No problems. You know where I am, Chris, if you need any more help for the next one.
You too.